Every year, India's top business leaders come together at the ET CEO Roundtable to have a super engaging conversation about the most pressing issues facing India and the world. Good evening, everyone, and a very warm welcome to the Economic Times CEO Roundtable. I hope you're all settled comfortably. Now, two words that would describe this year, 2024, the best are shock and awe. We've had devastating wars and geopolitical upheavals, inflationary pressures and economic downturns, and a massive digital revolution in the form of AI. So, of course, now perhaps more than ever, power continues to shift to people and companies that hold the keys to the digital future. And last, but definitely not the least, this year we've seen the comeback of one of the most polarizing leaders of the democratic world in its most powerful position. Now, India, as always, has been insulated from the worst of global shocks and stands to gain from the best of its disruptions. While India's latest economic growth numbers have given a rude jolt to the government and the central bank alike, and inflation, rural consumption, and salary levels continue to be worrisome, we are still, many would say, on the brighter side of the global economic and geopolitical story. So, in this changing world order, should India hold on to a stance of cautious optimism, or is it time we unleashed the animal spirits? That was the topic of discussion on Wednesday evening and our episode for today. On the panel, you shall hear Lakshmi Venu, Director TAFE.
India is almost the envy of the world. We have geopolitical stability and hungry youth ready to grow.
Salil Parekh, CEO Infosys.
What we see with generative AI today, we're going to see even more with quantum tomorrow.
Zia Modi, co-founder and managing partner AZB and Partners.
I actually don't see very many young people on the board, and I don't see very many women on the board.
Uday Kotak, founder Kotak Mahindra Bank.
Great macro, challenging micro as my perspective of Indian economy today.
Preetha Reddy, Executive Vice Chairperson, Apollo Hospitals.
Policies have to be growth friendly and not just politically right.
Romal Shetty, CEO Deloitte South Asia.
Whenever there are constraints, innovation will happen. And with our youth, that is one advantage that we actually have.
Anish Shah, Group CEO Mahindra Group.
Subsidies must achieve a policy objective, and they have to be short-term.
Rohit Java, CEO and MD Hindustan Unilever.
India's income pyramid is going from a pyramid to a narrow pyramid to a diamond. That trajectory is relentless.
And Nicholas Berggruen, founder Berggruen Holdings.
India is unstoppable. The question is speed.
Moderating the conversation is my colleague and co-host, Arijit Barman. Listen on, it's Friday, the 13th of December. I'm Anirban Chaudhary. This is The Morning Brief.
So good evening, everyone. I wanted to start straight away with a pop quiz. So we're going to go this way. I'm going to ask one question, a common one for all of you, which is, the Indian economy has been on a roll for the last many years. Equity markets, we've seen the number of issuances, overall GDP numbers, but last 2 quarters, we seem to have hit a road bump of sort. The growth rate has fallen. The corporate earnings in the last quarter has been weak. Therefore, there are doubts creeping in. Now, my question to all of you is your short-term view of the Indian economy, one area of optimism and one area of concern. Lakshmi, we'll start with you.
Taking off from your theme, I think it is animal spirits all the way in India. So perhaps there's a softening. I think it's a short-term blip. The industries I'm in, farm, rural and manufacturing, look very positive in even a 1 to 3 year time frame. I think the Indian economy is going to grow standalone and relative to the global economy. Today, India is almost the envy of the world. We have geopolitical stability, in contrast to what you mentioned, policy stability, and hungry youth ready to grow. So when I look at rural, That's what makes me the most positive. Today, we have much better infrastructure in terms of physical, data, finance, connectivity to the market. So if now is not the time to go above and beyond just primary agriculture and build entrepreneurship in rural India, bring the growth story and the animal spirits of urban India more into rural India, I think it'll add to this 3-year growth story and balance our growth also.
And what's the area of concern?
How we execute it.
Okay. Salid?
Our business is really more export-oriented, but with respect to India, I'm a huge optimist. The consumer demand is massive. The policy regime is very strong. The way we are implementing all of these activities is straightforward. There's a lot of entrepreneurism, and you can see the dynamism. So as we say in our business approach, let's look at the 3, 5, 10-year view of where things are going, and it's extremely positive. In fact, in terms of concern, is really the type of dreams or ambitions that entrepreneurs will have. That is, if anything, a concern. We have a huge set of that, and to me, there is no real constraint in what we can achieve.
And yesterday we heard about Willow, so it's going to get even faster and faster and faster.
Quantum is, I think, a huge positive. Of course, there'll be some impact in India, but globally, quantum is going to have a phenomenal impact. What we see with generative AI today, we're going to see even more with quantum tomorrow.
Right. Zia?
So the good thing is that as, again, an intermediary, a services provider, we see the world looking much more to invest in India than I would say in the last 2 years. I think the sweet spot is disaffection with China, seeing India's growth story, seeing the successes that people have had. I think private equity in particular is totally committed to investing more in India, which is great. Strategics as well don't think of us as China plus one, thinks of India as India. What could be better is to allow a perception of more ease of doing business, to make things move faster, to basically have regulation that makes things more autopiloted than micromanaged. But overall, if you ask me where's the balance, clearly on the positive side.
Great. Mr. Kotak?
On this, I'm going to keep it crisp following your advice.
Okay.
My good news is great macro, challenging micro.
Okay.
So that gives great macro, challenging micro as my perspective of Indian economy today.
So I'll interject and I'll tell you that everyone's saying the growth path that everyone's talking about, the K-shaped economic recovery is named after you. And you've confirmed that.
Thank you very much. But I think what I would really like is to see a very stable gradient up, okay? So that's what we really need. And if you go back to history, since you asked me a little more, is there have been times in history where you have to take advantage of the moment of history, which is where India is.
Right.
And we have to do it with our head on our shoulders, feet on the ground, without being carried away with hubris or exuberance. And that's what we have to be careful about.
I think forward-looking, it is quite exciting, simply because there is so much more to do. The macro bit is a positive. From a negative perspective, I would think that two things which do cause concern. One is that, policies have to be growth-friendly and not just politically right. And the second is that we have one of the world's largest growing youth, young, smart. They need to be educated and skilled right and gainfully employed, because unemployed youth are probably one of the largest reasons for a country's downfall. So I think this aspect is very important for our growth.
Yeah, because, Preeta, the median age is 28, while that of China is 38. So there's a tremendous amount of potential.
So that's good
a
and
demographic
bad.
Dividend, I guess.
That's good and bad. And the bad is if we don't do something about it, you will have a problematic group to take care of.
That's true. Romal?
Looking forward, you look at all aspects, whether it's urbanization, whether it's infrastructure, whether it's women in workforce, whether it's formalization of the economy, there is significant still roadmap to go. So I think in that sense, both even in the short term, our own views will still be above 6%, 6.5%. I think we'll still grow. We have every week a client coming in wanting to set up. But like Zia said, is our ease of doing business so easy that we can plug and play and actually start setting up things? And we should put that focus on manufacturing, because services, I think, we're phenomenal as a country, but I think manufacturing is important to sort of take it to the next level.
So concern is not too much focus on manufacturing as yet, and we should double down.
I think the focus is there, but I think we need to scale. Without scale, I think manufacturing will not go anywhere. So I think that we need to put a little bit more impetus there.
Right. Anish?
At Mahindra, we are not worried about the short-term blip. We look at India with a lot of optimism, and we feel it's going to be animal spirits. The biggest opportunity for us is for India to be the manufacturing hub of the world. That requires us to have the lowest cost, greater ease of doing business, and the highest quality. There is a lot of action from the government in terms of policies to enable that to happen. The challenge is that we have limited time to do that. If we don't do that in the next 3 years, we will have lost the opportunity. And therefore, we need to move fast.
So concern is we need to be steady and move accordingly. Rohit?
Yeah, we were just speaking a while back in the jury that there are like 3 forces that are transforming the future: genomics, digitization, and the fact that energy will also transform. So 90% of India is still to be built. So very important is to keep an eye on the long term and remain consistent and remain strategically disciplined. What's structurally challenging, and it's been recognized in all the actions you see in the space of employability and jobs, because consumption is dependent on consumers. Consumers are going to be the young billion people that's going to enter the workforce. So they need jobs, they need opportunity, whether it's through micro or medium small enterprises or through big companies. So all of the effort that one's seen in the recent past towards increasing the opportunity for youth is absolutely in that right direction. It needs to pick up momentum, scale, and all of us need to sort of put our shoulders to that agenda that the government has just initiated.
Right. Nicholas, they called you a homeless billionaire, but you're jet-setting from Venice to New York to London to Abu Dhabi, but you're an Indophile. You've been to India. I was reading an old interview of yours where you had said the biggest concern that you had about India 5-10 years ago was bureaucracy and red tapeism. Have you changed your mind?
I think India is unstoppable. The question is speed. What speed? And I think that is very dependent on your ability, India's ability to accept change. And when a place that's so big and so complex as India is growing this fast, I think if internally government looks at itself as a service organization more than a political organization, I think that's helpful. And I think that if civil society is able to enable but help change the way India functions, Indian consumers, Indian industry operates, then you can achieve your potential.
Lots of interesting points. We'll drill down on many of them. In fact, Rohit's given me the perfect cue for my first question, and that's for Anish. It's about energy, because that's on everybody's mind. How do you see the energy economics play out over the next 2 decades? In a developing country like India, will fossil fuels remain supreme, or it's the era of the greens?
The era of the greens. For India, it is very clear that the fuel import bill has to come down. For India to progress, that is a must. And renewables in India have already taken a life of their own, and that's unstoppable now. At Mahindra, we're going to 100% renewable within the next couple of years at most. Electric vehicles, our electric three-wheelers as an industry has gone from 0 to 22% in the last 3 years. And the industry will get to 100% electric in the next 3 to 5 years. In four-wheelers, we are at 1.5% right now. But with the new products that are coming out in the industry, we will leapfrog and move much faster than anyone has expected. So for India, it is going to be green.
Mr. Kotak, many of the economists that we talk to, they say that one of the key reasons for the short-term slowdown that we're talking about, it's been attributed to the reluctance of banks to lend, and which is reflected in loan growth, which has fallen to 11%. Why are banks not lending?
I think I'll first stick to the original theme, which is great macro, challenging micro. That applies for all sectors, including the financial sector. And we need to move into two important areas. First, there's a massive movement of saver to investor. So monies are moving from bank deposits to investments. And of course, that leads to a overall challenge of how do you fund balance sheets.
Yeah.
And therefore, for giving loans, you need raw material, right? So that is one of the things which must continue to flow. So I think there is one significant aspect which needs to be addressed as banks expand their balance sheets. And second is, I believe that financial services, we have had a great amount of macroeconomic and financial stability. Time has come for unleashing animal spirits.
So are we being over-regulated? Is that a worry?
You just have a change at the RBI governor. There's a major change.
What are you expecting
I
from
think
him?
we've got to wait for how the future pans out.
That's a diplomatic answer. But Zia, I'll come to you. The other aspect about growth is regulation and sticking to it. Now, there is a bit of worry about the inconsistency in which laws are being interpreted, whether it is the overturning of the earlier ruling in the mining royalty case or judicial intervention in arbitration proceedings. Why is the legal system still unpredictable, and what can we do?
It's not unpredictable, it's just slow. What we need to fix is the vacancies, the physical infrastructure. I think ultimately, as a lawyer, I have supreme faith in my Supreme Court. The judgments, even if they take long, 90% are correct. I think the problem as a perception of India is that it is a tough country to get quick results, comparatively quick results. The insolvency code has proved that you can move faster. But if you need 100 judges and you've got 50, and you don't have the physical space to house the balance 50, it's a problem. So I think that's what our government needs to focus on. I think that it's just the backlog.
Preetha, Zia had also talked about private equity becoming more and more robust asset class, and we don't see that as much as we've seen in the healthcare space in the last probably 12 to 18 months, right? Is healthcare so profitable that, private equity chasing IRRs are going for it like as if there's no tomorrow?
Healthcare, when done right, can be profitable. The IRR should be between, max of 16%, which is what I think the returns you're looking. But the private equity is not getting that kind of returns, in the countries where they come from. So that's probably why they invest. But at no point should private equity really run a hospital as it is. So, they have learned to work with people in charge, whether it's the promoter or whether the doctors and CEOs. And I think that mindset is very important for whoever invests.
So you're saying that private equity shouldn't own hospitals. They can be an investor, but they shouldn't run the hospital or be the controlling shareholder.
I think they are running already, and they are controlling shareholders. It's just that they have to be cognizant of the fact that, healthcare is not like any other business, and it is about life. Once they get that right, I think they just succeed. We were the first ones in the country where private equity came in. And after that, there's been so much happening. And obviously, something has gone right that they're, doing more and more into healthcare. And the level and standard of healthcare is growing, and it is doing very well. The rest of the world is looking at us. So somewhere the formula is working well.
But the quality care is becoming more and more expensive for the middle class. Would you agree?
I think it is expensive because there is a cost to care, but you will also see that insurance is growing, that the insurance sector is growing. And if people understand that insurance is probably a big answer to healthcare costs, we will be able to get it right.
Rohit, the absence of middle-class consumption has been the theme for most consumer goods companies. If anyone dials into any of your analyst calls, that's what everyone keeps talking about. One factor appears to be the tepid real salary growth. Are companies prioritizing shareholders over workers?
I think just to respond to your first point, which is about the notion of middle class shrinking, which you implied that, I don't think that's really true. If you start looking at 1 quarter, 2 quarters, there's a lot of noise, and you can have varied interpretations. But if you look back over the last 6-7 years and look forward 6-7 years, India's income pyramid is going from a pyramid to a narrow pyramid to a diamond. That trajectory is relentless, which means the middle class is growing and will grow. And as people build new homes, build new nuclear families, they buy things to clean their bathrooms, they buy a washing machine, they upgrade their quality of life, they travel, they go to a better medical care. All of that is happening in the country.
Because the chief economic advisor also flagged off this issue about, salary growth is not happening, and therefore it's also impacting consumption or the growth of consumption, especially in urban India. So do you agree? I mean,
if you look at just the economic structure of even the livelihood, we have a large number of people in rural areas in agriculture, so 40% of the population. We have 65 million micro, small, medium enterprises that employ 2 to 3 people. So, you're talking of a few 100 million people there as well. So the large population of the country actually is sort of self-sustaining. And then there's, of course, a swath of people in urban areas in salaried roles. So I think the pie has to bigger for all of the people in this value chain. So I would say that we must not be focused on just one stakeholder in this, even the livelihood value chain, but look at the bigger picture of the country here.
Right. Mr. Kotak, we were going through the RBI data, and one factoid stood out, which is there's been a 50% rise in gold loans, which many people would say also highlight this point that I was referring to. There is some amount of desperation creeping in, especially amongst lower income families or groups. Is that an area of concern?
I think first of all, if you look at gold, the price of gold over the last 12 to 18 months would have moved up by about 20%. So that itself would increase the value of gold against which you can borrow. Therefore, the underlying collateral going up makes it easier for people to borrow. Second is you're seeing clearly stress in the microfinance sector, and you're seeing stress in some of the unsecured personal lending sector. When the stress comes in those sectors and people have to repay their loans and the lenders want security, it goes up. The people take money as gold loans in lieu of taking money against unsecured loans or microfinance loans. So there's a switch element as well to this. There's an element of higher valuation of gold. And third is, from a lender's point of view, the capital charge on a gold loan is much lower than any other loan. So therefore, banks' capital allocation against a gold loan is much lower.
Right. Lakshmi, you travel quite a lot, and you were saying just before we met here that your last trip, I think, was in Uttar Pradesh. As you travel, you're getting first-hand information. So if data is the new oil, you are a repository of data, especially from rural India. What's the pulse that you're picking up?
Rural India is a particularly exciting place to be today. I come back really energized each time from these visits. I think pre and post-COVID, it's fundamentally changed. And to my mind, at least, it's driven by a few key changes. One is the knowledge asymmetry that used to exist between urban and rural is virtually gone. With cheap, accessible data, today the rural customer has access to all the same information and sometimes more time. So he's very knowledgeable. The second is, I think access to markets has improved, and the financial infrastructure in which the rural customer is big step more mature. So today you see this interest in entrepreneurship really coming out of the rural market. And even if we look at B2C, food products, today we're too focused on primary agriculture. Today, if you look at food products, where the largest exporter of rice, millets is seeing a real resurgence, and urban India is really pulling demand, let alone exports. Urban India, for example, there's such a discernment today on food, quality of food, and a strong convenience bias with all the Instamart that we see. So if someone like me says on Swiggy Instamart, I want Slurp Farm for my kids, that automatically goes back into the millet farmer.
Yeah.
So that B2C play can really help bring prosperity back into rural India. So I think that's the kind of potential I see coming out of rural India. It can really turbocharge our growth story.
But Nicholas, I'm going to come to you. Value is what is getting created, is getting captured by IP. And by that definition, it would mean even lesser number of people enjoying the upside. In a world where inequality is becoming a very big issue, wouldn't this make the world even more unequal?
Inequality. I think it's a big issue, and it's an issue everywhere. And it is an issue in India. The good news is that India is growing, so the question is, sooner or later, because of the world becoming more and more digital, the inequality is going to grow proportionately. So how do you bridge that gap? One of the things that we've been working on, this idea of universal basic capital, which is simple. Make everyone a participant, meaning an owner in the future, in some ways. Some countries have been able to achieve it. Australia has done it through savings plans. Singapore has done it through their sovereign wealth funds. So the idea is that the economy is going to ultimately help most people, but it'll help some much more than others. And not so much the case today in India, but in America, as an example, the owners of digital rights are becoming richer and richer in comparison to others. And I think that's going to happen everywhere, including in India one day. So the question is, if you want Indians to participate in the future, and the future is going to be more and more digital, how do you make them be an owner? So you can do it. Uday talked about the fact that bank deposits are being turned into investments. That's where you need to bring Indians, meaning as investors, as owners. And the question is, how do you achieve this? And I think there are lots of different mechanisms to do it. As I said, savings plans, sovereign wealth funds. But I think ultimately, and you're young enough so that you can do it, and you're growing fast enough so that you can actually afford to do it.
Right. Romal, the world's most powerful man has just one mantra: tariff. Is it the beginning of the end of globalization, the way we all know it, where the share of trade begins to fall?
Just remember this, that there are two parts of tariffs. I mean, let's just take one part is, okay, we'll put from US to China. But remember also rare earths. Without rare earths, you will not make chips. So it has a dual effect. So everything has and in today's coupled world, how much ever we think it's decoupled, there are issues. So I think there will be some bit of tariffs, of course. And are these countries already factoring in for the tariffs? The answer is yes. They're already factoring in for the tariffs. But it's the extent of tariffs. And over a long period of time, these kind of tariffs will actually cause an issue in the home country itself, right? Because it becomes much more expensive. And there are ways of doing that. And you said this, even in the US, we do think that it's much more stable. It's more predictable than what we think actually the situation was before the elections. So we're very clear because it's a full majority that has been won. And, he's a businessman, so, he knows how to do trade. So it's not going to be that just there'll only be tariffs and tariffs. So
we talked about POTUS, Salil. Yesterday, Axios, the US media organization, they came up with a CEO survey in US, and the overwhelming response was that the new president will usher in an era of low tax and less regulation. 40% of CEOs in America, they plan to increase their capital spending. Now, that must be music to your ears, because IT budgets are expected to get a massive bump up as well.
So we can't say anything about the short term, but in the medium to long term, I think anytime we'll see capital allocation increase, technology will get a bigger boost. So today, most large companies where we operate are looking to use technology to change radically their growth outlook or their cost to efficiency outlook. And in that, One of the biggest technologies, of course, is generative AI, but there are many other technologies. To put generative AI to work, you need a very strong data analytics foundation. You need a very strong cloud foundation. And all of these things typically require large capital allocation because tech has gone from being literally an operating expense to a capital decision. Mostly made with the input of the CEOs in these large companies. So without having a specific view in the short term, in the medium to long term, anytime we see the economy doing well, and especially for us in the Western markets, we think technology will benefit. The second, the usage of technology is changing dramatically. So as we as consumers are using technology so much, large enterprises want to use technology because their customers and their employees are using technology. And so that trend itself gives us a long-term optimism. So most of these things are music to my ears.
That's great news. Now, Anish, let's talk about the auto sector as a whole. Now, the turmoil in the sector is beginning to shake governments, be it Volkswagen, Stellantis, GM. The message is pretty much muddled when it comes to the future of EVs. You said Mahindra is going all electric in a few years. Government finance may provide little scope to keep subsidizing EVs in a country like India. Is there a future for EVs without subsidies? Can it be a profitable business?
Subsidies must achieve a policy objective, and they have to be short-term. And let me therefore take the example of electric three-wheelers. This took off with FAME 2 subsidies 3 years ago. The subsidy has been reduced by 50% already. Next year it reduces by an additional 50%. And within 3 years it goes away. In that time period, the industry would have gone from 0 to 100% electric. And that's a perfect use of a subsidy. In fact, one of the best examples around the world where it has worked. In electric four-wheelers, we will follow a similar path. The subsidies are in place today. There's nothing else that's required. And for the time period that they exist, should be enough for manufacturers to be able to convert to a large level of scale from an electric standpoint where we will not require subsidies anymore. We have introduced a couple of born electric products at prices that are very attractive from a combustion engine standpoint. So it's something that is working today. And therefore, we feel that the policy objectives that have been laid out are well laid out and something that the industry will transform to electric with that.
Nicholas, India's been part of the chorus at COP29, for more funds from developed countries coming in for climate change. Now, mitigation here means reducing or avoiding fresh greenhouse gas emissions. Would you agree this is fundamentally misconceived, which is why, the message from each COP is progressively getting diluted and the confusion prevails and we don't move forward, we're actually moving backwards.
There's going to be a difference between the countries that are very advanced economically and those that are still developing. And you cannot have the same standards for both. You cannot say to a country that's still developing, well, listen, emit less, consume less. It's frankly not practical, not fair, and ultimately I think humans will not behave. So I think the solution really has to be, and is becoming more and more clear, that it is technology. So new technologies around better energy sources is really the solution. Now, the question is the transition, because we can all die in the transition. So how do we make sure that we get there? Because I think we will get there. We are innovative enough, the pressure is strong enough, so that we will innovate to solve the issue. The bridge is what's concerning. And there, frankly, everybody has to participate to some extent. The question is who gets punished the most and in what way. Frankly, I'm too far away to have a proper opinion. But more investments, frankly, by private enterprise, but also by governments in new technologies is key. The faster we do it, the more we do it, the more we'll have a chance to solve the problem.
Zia, we've been talking about demographic dividend. And talking about professionals, we are also seeing a transition in corporate India as many from the next gen, like Lakshmi, are joining boardrooms. You deal with many of them. Do you notice a difference in the way they approach problems and seek solutions?
I actually don't see very many young people on the board.
Really?
Yeah. And I don't see very many women on the board. But I think that the ability of the current boards that I deal with to understand risk better and reputational assessment better has definitely matured. So no one wants to be on the front page for the wrong reasons. And whatever their age, I think I would like to see more of the younger, not promoter generation necessarily, but younger people. But I think that our board members like sagacity, like a little bit of grey hair. So we'll see. 10 years later, it may be different.
Not just board members, there are also a new generation coming into business. So how do you see them evolve?
Those are fantastic. Those are your animal spirits.
Mm-hmm.
They have yet to become seasoned board members. Their animal spirits outweigh their reverence for the Companies Act. But that's the passion that we've been all talking about for Mother India, right?
Mm-hmm.
It's this new set of dreamers that the country gets excited about and is willing to back them with an idea. Some fail and some have spectacular successes. And like all good Indians and citizens, we like to talk about the successes.
Mm-hmm.
So good for us.
We thought for a second that you were referring to Bangalore Inc. or the venture capitalists when you said being brash.
Not necessarily. You have Gurgaon, you have other ecosystems which have startups as well.
Mm-hmm.
You have our boys and girls going to Singapore or Dubai. So I think it's not just Bangalore. I think it's just great, passionate dreamers who get backers, who are willing to give their money for risk and for the animal spirit. And that's what's great.
Lakshmi, women are also becoming self-employed. Many are becoming entrepreneurs. Are we doing enough to upskill them for, the complex processes of manufacturing, that is completely changing the shop floors?
I'll take that in 2-3 parts. One is skilling. I think I'll give you one example of success. At SCL, we've employed quite a large number of women in our factory floor, and they've had actually beaten our benchmarks on productivity and safety. Mm-hmm. So there's actually an internal demand for more. The bottleneck is supply of skilled women. Mm-hmm. So we are starting to partner with vocational training institutes to promote it, and we'll help them develop the curriculum. We in turn will absorb some of the students. So that model, I think, could be scalable, because India, in the larger context, is receiving unprecedented investments in manufacturing,
right,
be it domestic from overseas due to our geopolitical position. And if we want to capitalize on that and the demographic dividend, 50% of that dividend are women. So we have to bring them in meaningful numbers. It's a must do.
I'm going to ask Salil and Romal 2 questions. One is to you first, Salil. How do companies like Infosys design their AI strategy so that India can keep its X factor going? You talked about quantum. How are companies such as yours making that change?
We are really fortunate first that we have one of our founders, Nandan, as the chairman. He's personally driving AI thinking. So the way we've articulated it is everything that is going on in AI, we are doing first to ourselves. So I talked a little while ago about a small language model. We built it for use within the company. We have agents for generative AI agents now, which we are running within the company. We are then building these for each of our industry groups. So we work across most industry. If you break it down, about 20 industry groups. For each of them, we are building specific AI applications. And then we're building horizontal capabilities. For example, if you're doing IT operations management, we have a small language model for that. The thinking for us is, what can we apply generative AI to in our service offerings and in everything we're doing with clients? Again, to have someone like Nandan is a huge benefit with his vision and with the way he's looked at the company from founding. And we have people within the company at every level empowered to drive that. So we have a large number of internal projects and now significant number of actual programs with clients running with AI.
Right. Last word, Romal. The big headline in the last 1 year from India has been the GCCs, Global Capability Centers. Now, GCCs are among the fastest growing segment across India Inc. And the likes of Deloitte are sourcing work in India. It is also eating into the local software industry. Can they be expanding enough to offset the job losses?
No, to be honest, so the GCCs worked on a couple of models. The first is pure play, their own internal one, but most GCCs do take help of other vendors as well, other partners as well, because there's no one company that has all the capabilities. So bringing into the ecosystem, whether it's large SIs, Salil is here, whether it's startups, all of them are needed. So you take Unilever, for example. I mean, it's got a great GCC which services across the world, but it has a combination of everything. Large SIs, OEMs, startups. So in that sense, they're actually creating a lot more job opportunities. It's not actually creating lesser job opportunities. And we see that, for example, in the past, it was largely what we call as back office work. But today, for example, front office things, engineering, research, and design. I mean, the S-Class Mercedes ADAS system is actually developed out of India. That's done out of the R&D center in Bangalore. Right?
Wow.
Pretty much Shell's 85% digital transformation across the world is done out of Bangalore. So I really don't think they're actually creating job losses. I think they're just creating more jobs, to be honest.
Thank you once again for joining us and sharing your thoughts. Deeply appreciate. Thank you very much.
Thank you.
Thank you.
That's it for today. You were listening to this episode on The Morning Brief. It was produced by Vinay Joshi, sound designed by Rajas Naik. The Morning Brief drops every Tuesday, Thursday, and Friday. Keep listening to us wherever you get your podcasts.